Hey guys, welcome back to my channel. Um, Today I wanted to talk about some of the possible forms that you might see coming up for tax season. So since it is December, a lot of people tend to not think about taxes until the next year, but I'm kind of thinking of doing a little bit of a series on things that you can do to prepare for tax season because as you know, a lot of people may have been investing in stocks or getting rid of some of their debt. And I want to talk a little bit about the types of forms that you might see. And then later on, talk a little bit more on each of these forms and little tax strategies that you can do to avoid paying these huge lump sums of tax. So without further ado, um, let's get into it. So one of the most common forms that I think most people already know is the W-2 form. So the W-2 form can take a lot of different layouts or formats, but the overall structure of it stays the same. So let me make that a little bit bigger. So for the year 2020, this is pretty much what most W-2s are going to look like. And I want to kind of highlight a couple of things on here and the reason why they're necessary. So the first form that I want to kind of take a look at is going to be the W-2 form. And a W-2 is typically a form that you get when you're employed through an employer that reports your wages directly to the IRS. And what they do is that they submit a version of this form or a W-3 to the government where they are responsible for holding on a portion of your taxes throughout the year. So there's a variety of numbered boxes, and the most important ones that you're going to see are going to be the employer's name, address, and zip code, the employer's or the employee's first name and initial and last name, and the address. So these are both things that are going to be input. And one of the most important things on this form is going to be the employer identification number. So what this number is basically the social security number for the business itself. So this is how the IRS identifies what the business is and that you're in fact an employee of this business. So number one, box one is always going to be whatever gross amount of money that you were paid throughout the year. Box two is usually however much tax that you chose to have withheld with your W-4 form, which is the form that you typically get or sign that shows how many allowances that you have or that you're going to choose to opt into or out of even throughout your employment. Box three is typically the Social Security wages, and box four is Social Security tax withheld. So these are typically held at specific rates, and there are certain types of jobs that would either have exemptions where you wouldn't have to pay a portion of it or the entire portion of the Social Security taxes or wages. So the same applies to the Medicare wages and the Medicare tax withheld. They're both rates that combine to be around 7.25, I believe. And boxes 9 through 11 typically don't or aren't filled out for the majority of people. If they are, then it typically is a little bit of a different case, and I'll kind of go through that in a different video if that's something that people would like to see. Boxes 12 through A through D typically are going to be a numbered number, and it's going to be some kind of exemption or some kind of withholdings that you have that are a little bit out of the commonality. Your state, so I'm currently box 14 would typically have the California Disability Insurance, and that would show up here as CASDI, and it would be an amount. And anything from box 15 down is typically related to state income taxes. And a lot of people don't realize, but a W-2 typically holds your federal information and then the state information. And there's a total of 11 states that don't have any kind of state income tax, so these boxes would always be empty. But in California, since we do have a state income tax, we would have the state, which would be California, it might be marked CA. and the employer state ID number, which would be pretty similar to the employer identification number, but a state version of that. And the same amount of your gross income is going to show up in box 16, like it did in box 1. And then the state income tax would be at the state income tax rate. And then, typically speaking, boxes 18 through 20 don't typically have anything listed. If they do, sometimes the California disability insurance may not show in box 14, but might show up in boxes 19 and 20. So that's it for the general W-2, if anything. The next form I want to talk about is going to be the 1099 interest form. So this form is typically something that you would get if you have a savings account that yields interest or a checking account that yields interest. And usually it'll be something like US Bank or Wells Fargo or some kind of bank or bond or something that you have that's yielding you interest. So the payer's RTN is going to be listed over here. Similarly, it's an identification number that the IRS uses. It's not much of concern to you unless you're filling it out and doing TurboTax, and that's the number that you would input where it says to do so. Otherwise, it's something that your CPA or tax preparer would be dealing with. Box 1 is going to be the interest amount. So however much interest that you earned from whatever that account is, and then however much tax was withheld, and how much of that interest was tax exempt. So those are the boxes that are typically filled out. And again, some of these boxes typically are empty, but if you do have something in these, it would be in a little bit more of a detailed video to kind of talk about the different scenarios that you would see with these interest forms. And that's just the majority of what I wanted to cover, the gist of what I wanted to cover for this form. The next form I want to talk about is going to be the 1099 dividend. It typically shows up as 1099 DIV. And this one is the same concept. This is the same concept for almost all of these forms, where you have a payer's name, the payer's TIN, taxpayer identification number, recipient's taxpayer identification number, which would be your social security for the recipient. And then for the payers, it would be their taxpayer identification number, which is like a social security number, as I mentioned before, for the company or for the firm. And then in boxes 1, it would be the total ordinary dividends and then qualified dividends. So the difference between an ordinary dividend and a qualified dividend is that one is the gross amount of dividends, and then qualified dividends are either dividends that are qualified for a different tax rate or qualified to be exempt from taxation altogether. And then these are typically also different types of tax rates and different types of taxation. And the unrecaptured Section 1250 types of gains and collectibles and Section 897 are very complicated tax areas. The majority of tax preparers are not going to be looking into these, and I think I'll save that for another day where we kind of go a little bit more in depth with that. And I think it's important for me to disclose that I'm an accounting student. I recently graduated with my accounting degree and management information systems. I have not yet sat down to study for the CPA exam. So the purpose of these videos is just to inform you a bit and get you to know a little bit more about the different types of forms rather than actually giving any kind of real tax advice. Just fair warning and nice disclosure. The next form that I would like to talk about is going to be the 1099-C. So this form is called the Cancellation of Debt form. So typically you would receive this form if you default on a loan, or if you declare bankruptcy, or something along the lines of you just had a debt that was written off. Say you had a Wells Fargo account and you had maybe $2,000 left of a bank payment that you were supposed to make to pay off your credit card, but you missed a lot of your your payments. You didn't make them on time, so they wrote off the account. And for you, instead of paying back the full amount, they offer you a slightly lower amount just so that you can able to write off and completely close off the account so that they can recuperate some of the loss. And typically speaking, if you do settle an account, it does remain closed. It is still something that looks negative on your credit report, but it is a lot better than avoiding the paying the amount at all and completely defaulting. So the amount that was discharged for you would show up in box 2 where it says the amount of debt discharged. And the reason that you report these on your taxes is because it's considered income. So if I had a loan of $10,000 and I didn't finish paying off that loan, and like I had mentioned, $2,000 were left on that loan, the IRS is going to consider that $2,000 that was discharged as income, so I'll be taxed on that $2,000. So the debt description is typically going to be something along the lines of credit delinquency, or something along the lines of Wells Fargo, or it'll say something about a credit card if that's what it is, or if it's a car loan, same thing. And the same concept that we have here of a creditor's name and the debtor's name. You would be the debtor, the creditor would be Wells Fargo or US Bank or whichever bank that is that lent you the money. And box 6 would be the identifiable event code. So there's a list of different types of codes that are used within these forms. They're either numbers or letters, typically speaking, and they each stand for something. So for example, if you had a 1 or if you had a 2 or you had a 3, 1 could mean that there was a tornado in your area or a natural disaster or something along those lines. Or it could mean bankruptcy, or it could mean a default. So those would typically be also marked or identified in box 6. And if it was property, it would be the assessed fair market value of the property that would show up here. The next form I also wanted to talk about, which is super common, especially if you do Uber or if you do Lyft, is the 1099 MISC form, or 1099 miscellaneous. And I can't just tell you how many times I've seen this form and how much confusion it typically causes. But for the year 2020, the rules have changed a bit because a new form was introduced, which is the 1099 NEC for non-employee compensation. So now if you work for Uber or Lyft, you may receive the 1099 NEC, which is the non-employee compensation. But you could argue yourself that you are an employee and receive the form 1099 miscellaneous. So to go a little bit more into depth with that, box 1, which is rents, would typically something that you would receive if you were getting money from different properties that you own and somebody is paying you rent. So that's what a rent would be. So say I own a multi-family home, or I own a single family home, and I'm renting out to somebody officially, and we've gone through all the proper channels, and then we have the proper network, then I would be filing this form, and I would also be receiving this form, as this is the amounts of money that have been coming into me gross. Royalties, typically speaking, would be for people that deal in music or in the music industry, as well as acting or any type of intellectual property or any kind of videos or anything along those lines where you get paid just for having been a part of it. So typically that would be something that shows up in box 2. And then other income is income that couldn't really be defined and didn't really fit any of the other categories. So one of the more common ones would usually be in box 7. However, this box 7 here in this 2021 form, or this 2020 form going forward, looks a lot different than it typically would be. And box 7 would typically say non-employee compensation. But if this is typically where your income would be reported, which is typically how Uber and Lyft would report it before, it would probably show up in this form 1099 NEC, where it would be listed in box 1, and it would be transferred and created a Schedule C on your tax return. And what a Schedule C is typically an area on your tax return where you would identify your business expenses to offset whatever amount you have in box one. So say I had non-employee compensation. I was a contractor at, say, Apple as a sales contractor, and I made $10,000 through those channels. No tax was withheld at all throughout the year by Apple because they didn't consider me an employee. They considered me a contractor with them. So I would receive this form from them that says, we paid this person $10,000. Now, on my Schedule C, I would list out the various types of expenses that I had. So say if I had paid for a software and I was paying that monthly throughout the year, and that monthly amount that I was paying is what I needed, is something that was ordinary and necessary for me to run my business. So since everybody's kind of been working at home, a lot of times we have our own office space, which has its own sets of rules, but in a general gist, what could possibly become an expense or a deductible if you're running from a home office is however much of your time. Say I spent 40% of my time in my office and working directly just on client work. I'd be able to expense 40% of my electricity bill, my internet bill, and my heating bill, or whatever bills I needed to operate in that space. So just an interesting thing for people that run their own business or drive Uber and Lyft. But those are some of the more common forms that you're going to see if you're typically within the working range of 18 through your early 60s. If you're retired, say, or if you had gambling income, those would be different forms. And I could cover that in a part 2 series, just so that we don't run a little bit too over the time. And I just want to say thank you again for viewing my channel. Please keep in mind that I'm just starting out, so my videos right now might be a little bit awkward, but as we kind of progress along, we can grow together. And I'll try to be a little bit more concise and a little bit more to the point. Thanks again for viewing, and have a good day.